Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome. I'm Steve Rhodes, host of the Trader's Edge. Thanks so much for joining me. I absolutely love being here with you folks. Hopefully you're off to a great start of your Thursday. It is terrific Thursday, and you absolutely should plan to have a fantastic, incredible day, folks. You know, make it outrageously great today. If we take a quick tour around the markets, they have, as Tom likes to say, up, down, and all around. Right now, you got the Dow futures up about 18. You got the ES mini trading out at 1380 even. That is up about 1.75. You got the NASDAQ futures up 5. The small cap, the Russell 2000 up about 2.5. King dollar up 16 cents right now. Gold trading out at 16.44. That's up $4. Silver up 6 pennies out at 31.55. You've got light sweet crude. Still paying at the pump, so folks. Light sweet crude trading out at 102.45. Quick tour around the world. You got the DAX down just 19 points right now. The FTSE is green, up 18 points over in Asia. A little bit of a mixed bag last night. You had the Hang Seng up 214 points. Nikkei down 78. Of course, we expect the Nikkei to trade down much lower. We also had the Shanghai off a couple of points. 877-927-6648. You talk about a slew of numbers, folks. They are all over the place. You know, we're going to get right to them. And, of course, it is PGA Thursday, and the PGA tournament is off to the races. Right now in the lead, you got Matt Kuchar. Of course, he's 1 under after 1 hole, but maybe that's a good sign. They're playing in Texas, the Valero Texas Open, and that's the music that leads us off on Thursdays. You know, it puts me in the right state of mind. You want to make sure that you can always put yourself in the right state of mind. You know, maybe we'll talk about that later today. Maybe we'll just simply save it till tomorrow, but let's start, you know, what I've got up on my screen here, you know, folks, and you can always, you know, we do appreciate everybody listening to us on the radio, whether it's an archive version of this or simply live. We really do appreciate it. You can always catch the archive of the show on Channel 9 on Tiger TV. You'll be able to see my screens. You'll be able to see what it is I'm taking a look at. You'll be able to follow along as we do our paint by numbers approach here and taking a look at these markets. Right now, if you take a look at the ES Mini, this is the 60-minute chart that we've got on here. What the ES Mini is trying to do is punch down through the bullish engulfing candle that was created at 1:30 this morning. The candle engulfed a couple of sessions, and the low was actually the prior candle, which was at 1:30, 1379.50. You can see that in the 8:30 hour, as we came on board, tried to punch down through there, closed up higher, did not want to punch through there. Now during the 9:30 hour, meaning because we're looking at a 60-minute chart here, you're trading just above that area. We'll see how that will close. And, you know, because it's going to release information to us, of course. What you can also see up here, folks, is you can see a little triple top that we've got here. You know, you've made a move now twice. You first made that move, taking a look at the high that we're looking at about the midnight, 11:30 time frame on April the 12th. You then had the market push up into the 2:30, 3 o'clock time frame on the 17th, and then this morning, or late last night, this morning, 5:30, you pushed up again into that area. It got up to 1390 even, and then gave it up. So, you know, the market is struggling. The ES Mini, at least, is struggling to get up over that area. If you do get up over that area, it will send off an important signal. Why? Because, you know, right now what you are making inside the ES Mini is you are making higher lows. And again, we're looking at a 60-minute chart here, so it's a little bit larger time frame. We can always go take a look at the daily chart. You certainly want to do that. But before we do that, let's start taking a look at, you know, some of the numbers that we've got. Let's take a look at Earnings Central, if you will. And let's take a look at what is moving and what is grooving in the pre-market. So leading the charge. Now, these folks are the companies that released numbers either after the bell last night or before the bell this morning. After the bell last night, in the lead here, up 28%, is Melonix Technologies. MLNX is the ticker symbol there. Their total revenues, $88.7 million versus $55 of last year. Their Q1 net income, $12.4 million versus a loss of $1.62. So they're making a heck of a nice move. We'll go take a look. So that is up trading right now. The last trade fired off at about, I don't know, a couple seconds ago. 55.42. They closed out at 43.33. So let me just switch over to this other area here, and let's go ahead and put that ticker symbol up. Let's just go see what they are doing. MLNX is the ticker symbol there. Let's go ahead and widen this screen here so we can take a look. So again, the last trade fired off at like 55.68. And what we are looking at, so that's over its all-time highs. Let's just go ahead and put this thing back on a weekly chart here, see if we get a little bit better picture. Oh, this thing had a downdraft. So this thing is making an ABC pattern clearly. Let's go draw that ABC pattern. The A point is going to be at the low here. That came in November 2008 down at $6.02. Made a B point right up here on April the 23rd. Got up to a high of 24.78. Pulls back. We'll go take a look at what that pullback is. But pulls back into August 2010 to a price point of $14.67. You can see it is up over the 1.272. You can notice this C to D leg maintaining the same level of strength as the A to B leg. Again, we're taking a look at a weekly chart here. If we take a look at the retracement that it did off of the, what the B to C leg was, we'll go take a look at that here. It's going to be a pretty good approximate. 0.618, almost really right on the button. You got to love that sweet 618, folks. And we certainly want you to visit us here at TFNN. Come to Suite 618. So this thing is trading now out at the 55 mark. So let's compress this just a bit. See what we have at 55. Ooh, that's one heck of a jump. That is on its way to making a 1 to 2, A to B equals C to D. That's going to have one heck of a gap today. Let's take a look at what is next in the lead here. Percentage-wise, you're looking at eBay. eBay also released numbers last night. That is trading up 9.4% in the pre-market. Last trade just fired off at 39.25, closed out at 35.87. Then in third place, you've got Universal Fast Products. Let's see, UFPI. Is that the Universal Forest Products? That was close. Universal Forest Products. Let's see here. Their Q1 sales, $457 million versus $387, so that's some nice growth. Their earnings per share, 21 cents versus 19 cents, 2 pennies there. Let me see. How about profits? Where's the profits? Profits don't just stand out at me, so we'll skip that. But that is trading up 9%. That is trading up $2.94 right now. Then next, you've got Cypress Semiconductor, CY. They're trading up 8.75%. Closed out yesterday at 14.30. Cypress Semiconductor firing off a trade here a minute ago at 15.55. What do they have? Their first quarter reports. So what do we got here? Results. Give me one. What do we got? Okay, not firing off here right at me, so we're going to just move on to the next one. Let's see. Oh, they turned a loss in Q1. Well, but anyways, they are in fifth place. Then you got Penn National Gaming. They came out this morning with numbers. They're up 7% in the pre-market. Their last trade, what did their last trade fire off at? Looks like about, the bid is 46.02 and they asked 46.49. Closed out at 43.30 yesterday. What do they have here? Their Q1 revenue, $736 million versus $667. Net income, $78.6 million versus $51.53. Their earnings per share, 0.74 versus 4.8. So that's a healthy growth. That is on Penn National Gaming. F5 Networks, their next up released earnings last night. Their last trade fired off at 132.75. They closed out at 124.21 last night. They are up 7%, almost 7%. That is, and they had some good earnings, I believe, there. Too much news here to look real quickly. Boston Scientific, so BSX, they're next up. They released earnings this morning. They are up about 5.5%. Last trade firing off at 5.85, closed out at 5.54. Last night, you've got the SLM ticker symbol. That is, what is that? Sally Mae. Okay, Sally Mae profit. Fiscal 12 core. Okay, I want to see that. Let's take a look at their net income. So net income for Sallie Mae, net income $112 million versus $175 million. But the market is still digging it. They did earnings here from the previous year, so year-to-year core earnings. I don't know what core earnings means. I do like GAAP net income, though. To me, that makes a whole lot of sense. So their GAAP earnings per share, 21 cents versus 0.32, but it is still trading up this morning, trading up about 6%. Morgan Stanley released numbers this morning. They are trading up about 5% right now. Last trade firing off at 1860. Morgan Stanley closed out at 1766. That is up about 5% in the pre-market. Their earnings here, Q1 revenues, $8.9 billion versus $7.8. Their earnings per share, excluding items. Why are you going to exclude items, folks? 71 cents versus 59 cents. Let's go take a look at, let's see, what other big names. Bank of America, they're up about 2.5%. Last trade firing off at 916. Closed out at 892. What do they have here? I know that they did not have a terrific numbers. Their earnings fell to $328 million in the first quarter. So they've got mixed results, but the market still right now at the moment digging it. $653 million on their net income versus $2.05 billion in the prior year. That's taken a whopper, isn't it? But the market's still liking those results. Let's go take a look at what is grooving to the downside here. Let's see. So what is it that the market on the is not liking? Give me a second here to try to find where's the biggest. Oh, come on. Show up here before the... Okay, so on the downside, biggest on the downside, Qualcomm right now, down 5.8%. Qualcomm, what was their earnings per share? Well, we'll come back right after the break. We'll continue to take a look at what's moving and what's not. You got Basic Energy right behind Qualcomm. They're down about 5.5%. Polycom as well. Stanley Black and Decker. They're also off Select Comfort, Travel Zoo, and EMC Corp. We'll be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. Earnings Central, Sports Central around here. And in the world of hockey, there was a football game that actually broke out in Philadelphia last night. Those Pittsburgh Penguins, they did not want to. They were not going down easy. You know, no way. They were up against the ropes and fired back with 10 goals last night. You know, during the first period, you had the Flyers game and the Rangers Ottawa game. So you had the Flyers and the Penguins game, both kicked off at around 7:30. In the first period, between both games, I think you had 4 or 5 goals. So you knew it was going to be an absolute offensive night. And sure enough, that's what it turned out to be. Pittsburgh beat Philadelphia 10-3. I don't know where game number 5 is. I imagine they go back to Pittsburgh. So, you know, it should be a heck of a series. You also had Vancouver. They were on the ropes, and they said no to Los Angeles. They beat Los Angeles 3-1 last night. And then you had an overtime game in Ottawa with the Ottawa Senators beating the New York Rangers in overtime 3-2. So great hockey tonight on Hockey Central. What do you have? You've got a heck of a lineup. You've got 4 games tonight. You've got Florida against New Jersey. That'll be a great game. Boston and Washington, both those games. Well, the Florida game kicks off at 7. The Boston game kicks off at 7:30. Phoenix at Chicago at 8. And then St. Louis at San Jose. That's at 10:30. And yours truly will absolutely be snoring. I hope I'm snoring at that time. Not that I like to snore, but that's just a code word for absolute sleeping. So as we continue to take a look at what's going on in the markets, you know, we were taking a look at what was popping in the pre-market, releasing earnings last night, and to the downside, leading the charge on the downside is Qualcomm. They're down 5, almost 6% this morning. Last trade here, firing off at 63.03. They closed out at 66.98. You got Basic Energy Services, BAS. They are next in line, down 5 3/4 points. They had Q1 net income of $19.6 million versus a loss of $18, so that's not too bad. You had total revenue of $371 million versus $246. All that's good. The street, though, not digging what it is that they are forecasting, I would guess. They are down 5 3/4%. The last trade here, I don't see when the last trade here fired off. Last trade fired off at 14.75. If we take a look at Polycom, PLCM, their Q2 revenue, let's see, what do we have here? Q1 revenue, total revenue, $367 million versus $344. And their GAAP earnings per share, well, let's see here. Their earnings per share, 8 cents versus 19 cents of last year. They are down right now about 5%. Last trade, looks like, what was the last trade here? Fired off at about $12.59. That's on Polycom. Then you got Stanley Black & Decker. Stanley Black & Decker here, their earnings per share is 72 versus 92 cents. And their Q1 sales, $2.65 billion versus $2.36. Not too shabby there, but the market doesn't like it. They're trading off 5% this morning. Last trade firing off at 74.53. Select Comfort, those Sleep Number folks. Sleep Number, I think they've had a heck of a good run. As I recall, and take a look at their charts, they had Q1 income of $22 million versus 16. Their the sales of 262 versus 193, but they are trading down almost 4% this morning. Last trade firing off at 33.90. They closed out at 35.25. Travel Zoo right behind them. They're off about 2% this morning, so not a big huge deal there. Earnings per share of 23 versus a loss of 85 cents last year, so that is nice. And their let's see here. No other information that really pops. Oh, their revenue, 39 versus 37 billion. Lastly, let's see here. What else do we have on the downside of any significance that you guys probably follow? Nucor, NUE, they're off about 1.5%. United Healthcare, they're off just slightly. They released earnings this morning. United Healthcare, UNH, their earnings, let's see, first quarter results for revenues, $27.3 billion increase. So what was it? Their total revenues of $27.28 versus $25.4, and their earnings. Where's their earnings at? Earnings of $1.3 billion versus $1.34. That's it on the drops. When we come back, after the break here, we'll go see how these markets are going to open. Take a look at the ES Mini, how it's trading. It is still trading above the support line of the bullish engulfing that was put in at 2:30 this morning, trading out at 1381 as we go into the 9:30 session. Still rejecting that area. Give us a call, folks, 877-927-6648. We'll go see how these markets are going to open this morning and take a tour around the world. Go take a look at King Dollar and Queen Euro as well. We'll be right back, folks.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade. You've heard Tom O'Brien on the air and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks, and we are off to the races. I can hear that music in the background. There we go. Now we got the opening bell. Off to the races. You got the Dow down 15 points right now. S&P's off 2. Composite down 3. Small caps up just slightly green, 8 cents, if you will. You got Microsoft flat, Intel off 14 cents right now. Google down $1.45. Cisco off 9 cents. Apple leading the charge dollar-wise on the way down. They're down about $10. Stanley Black & Decker off they're in second place. Down $6 on the way up. Melanix, as we talked about before the market open, they were up large. They're up $13 right now. That's up 29%. F5 Networks right behind them. What we have on the screen here, as we're taking a look at my screen, we're taking a look at the DAX. Why are we looking at the DAX? Because, you know, all these markets, they trade. It's one world market, and it helps us to understand what's going on in Europe. Europe's going to be handing the ball off to the United States. And right now we're taking a look at the DAX. We're looking at this uptrend channel that it has been in, just like the uptrend channel that we can take a look at in the U.S. markets, in the S&P 500. And when we're taking a look here at the DAX, you can see right now it is testing the bottom of that trend line. You got the DAX traded out at 6,700.77, and today during Kate Stalter's show, in fact, it is a terrific Thursday, so following this show, you've got Tom and I doing the Money Masters, then we go out to Santa Fe to Kate Stalter, then 3 to 4, we will go to, we'll stay out on the West Coast, we'll go to Ken Shreve, who is the warm-up band for the Tom O'Brien show. So during Kate's show at 11:30, you should be able to identify where the DAX has closed. Is it going to hold this channel? Is it going to try to break it again to the downside? At this stage, what we've had is a false break to the bottom. That is on the DAX. If we take a quick peek over at the FTSE, let's see what the FTSE here is doing this morning. FTSE, let's see what that line is that I have drawn. Okay, the FTSE is coming up against that important area, which is the breakout that we saw both in our markets and in Europe. That was February 3rd. That was last time that there was a exuberance with regard to the employment numbers that were out there. Wide candle right there. It's not really a swing point, but still what I call a line of demarcation. The actual swing point would be as it pulled back on March 7th into that area. The low there being 57, 55, 69. You're trading just above that area right now. You can see as it has made its way up into that supply point, there is a supply line. Tested it yesterday, again testing that February 3rd low again today. That is on the FTSE. Let's go take a look at the currency markets. King dollar. What do we have going on with King dollar? Well, King dollar is up 15 cents right now. King dollar continuing to attack the top of that bullish engulfing candle from April the 3rd. The high there being 79.65. Testing. 1, 2, 3, 4, 5. Today is day number 6 of that test, trying to pound it down. And the king is saying, no, not going to have any of this. And so we'll see what. Now you can see it got into that bar early this morning and has rejected that. Of course, we have not seen any kind of conviction to the upside. It is just simply building cause off the side here. The question is going to be, is it building cause for this A, B, C, D up? Or is it building cause for an A, B, C, D down? Because if you want to take a look at the retracement levels here, folks, look at this. The retracement level, let's just take a look at this smaller move right here. Coming off of the April 3rd area up to a high. That's the low that was put in up to the high that was put in on April 6th. What you can see, it's done at 0.786 retracement. Now, if you go from the high area here that we're talking about on the March 15th area, when it made 81.16 down to the low of that bullish engulfing candle, what you'll see, it did a 0.618 area. So we are squeezed right in between there. You can see how the U.S. dollar index here is just simply moving in between the support and resistance line. The support being this bullish engulfing high, the resistance being the bearish engulfing high as well that was put in on April the the actual candle was put in on April the 11th. The actual resistance area is going to be the high from April the 9th out at $80.32. That means let's go see if the Queen is giving us any better indication of what's going on. The Queen now trading down inside that swing point from March the 15th. You can see how this area here has been tested for many days. This has been tested for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 2 weeks, just over 2 weeks. The swing point of March the 15th being tested. It was truly tested 4 trading sessions ago on the 16th as it got down to the bottom of that area. And so if you are bearish, you want to see it continue to trade down in here. In fact, you want to see it give up price at the 1.30029 because that'll put some energy in King dollar. That will go ahead and take out some price out of the U.S. markets. If we go take a look at the let's go take a look at what's popping and what's dropping. So we looked at Melanex earlier today. Let's go take a look at what's dropping. We'll just kind of switch back and forth. So leading the charge now on the way down, no longer Apple. Apple's in second place, and it's Stanley Black & Decker. The ticker symbol there is, look at that Melanex. Look at that candle there. Look at that, folks. That thing is a little rocket ship. Now, it is now made on a monthly chart, a 1 to 2 A to B equals C to D. That's pretty amazing. Let's just switch over to the daily chart here right now. Usually you do a 1 to 2 A to B equals C to D, folks, and that is an immediate trend change. Don't, but do not short the stock. Just pay attention and watch the stock. It has some absolute volume in here. That volume, folks, and it's a great-looking stock. So this might be one you want to put on your charts here. It's a great looking until you come all the way back here and see this volume session here from July the 22nd. That is a nasty looking. But we'll see what today does because you've only been trading here for 11 minutes. And what you've done is you've done 701,000 shares. That is on MLNX. But let's go take a look at what is dropping here, which is Stanley. Oh, now in second place. Apple just edging them out by a nose. We're still going to look at Stanley Black & Decker. See, this thing is gapped down. It's gapping down with some volume because you are 12 trading minutes into the trading session, and you are down with 1.1 million shares. This thing did break out a bit here on March the 7th. You are below that area. On March the 7th, you did 4.2 million shares. Today, right now, you're already 1.1, so it's going to blow that away. It is blowing away a swing point, that swing point being April 10th. Looks like they are falling like dominoes, breaking those swing points here from April 10th, just like IBM was. And the A to B equals C to D pattern on this. Let's take a look at it here. folks, it is right now the 1-to-1 on Stanley Black & Decker. You're already trading down there. And look at the move on this C to D leg, much, much stronger. That says Stanley Black & Decker probably wants to trade at least to 67.61. More likely it's going to come down. Let's see if we can find any other volume that's going to, here we go. So here's the area where it's going to find some support. That's why you want to go ahead and take your charts and pull them back. And we're taking a look at a breakout area from January of 2011. The low on that session, 71.69. High there of 72.81. You're trading into that candle right now. So look for some support. See if there's any support out there. You're going to know as it gets into the 68.59 area. When you get into 68.59, you're going to be right down at that 1 to 1.618. A to B equals CD. Let's see, since Stanley Black & Decker and Apple are going neck and neck, let's go take a look at that Apple chart, AAPL. Just to see if the apple is falling from the tree this morning. Apple looks like it has gapped down just a bit. Give me a second here to pull this up on the screen. Let's see, low of yesterday's session, 602.71. High today so far, 604.73. No, so we do not have a gap. Gapped at the open, but we do not have a open gap out there. Apple looks to be making, so the volume here, as it really came down on April 16th, you come down with 37 million shares, but you bounce right back up with 36.6 million shares. Yesterday, you do 34 million shares. So, no, even though it did break a swing point, absolutely did break a swing point. First time that it's done that in Lord knows how long. Broke that swing point with volume. The swing point we're talking about is March the 30th, folks. March the 30th, it did 26 million shares. The low was 597. You broke that with 37 million shares. But right now, I would have liked to have seen lighter volume on the bounce on the way up. That is on Apple. Let's go take a look at what is going on inside the Dow. We don't often do that, so let's go ahead and do that right now. So on the Dow, it's about 50-50, 50% of the stocks in the green, 50% in the red. So in the red, largest in the red, actually happens to be Chevron. So let's go take a look at CVX. That is the ticker symbol there. We know the energy sector has been struggling. That's being the XLE, one of the weakest sectors inside the S&P 500. Chevron trading down at 102.95. Chevron here looks like it has completed the first A to B equals C to D. That would be coming off of the high on March the 14th. High of 112.28, made its way down to a price point low of 104.85 on March 23rd. Bounced up, looks like it did probably about a 0.382 retracement. Bouncing up on April 2nd, making the high at 108.79. You can see that 1-to-1 A to B equals C to D. Was completed right here. Price projection would have been 101 and a little bit of change. It actually got down to a low of 100.51. So not too bad. Did that on April the 12th. You did bounce up yesterday. Looks like almost might be an open gap. Let's see the high. Not yesterday, a couple trading sessions ago. So the high of April 16th, 102.24. The low, 102.34. So you do have a little bit of an open gap there, but nothing spectacular volume-wise. That is on Chevron. Let's take a look here. Chevron right now fighting off a little bit of a supply line from November the 15th, where it did volume of 24 million shares. Let's see what else do we have going on in the Dow. Disney down about 32 cents. Let's go see if there is anything going on out there. You've also got McDonald's, ExxonMobil, Home Depot, Walmart, DuPont, Procter & Gamble, Kraft, Boeing, Johnson & Johnson, Intel, 3M, and Cisco are the stocks that are down inside the Dow at the moment. Let's take a look at Disney here. Disney off really just a bit, so nothing that I see here on that chart, and nothing really at all that I see on that chart there. Not really not too bad from a volume standpoint. Travelers companies there up $2 and change, 2.25 right now. Let's go take a look at Travelers, see what they are doing out there. TRV is the ticker symbol on Travelers, and Travelers gapping up this morning, trading out at 61.77. Volume-wise, what do you have? You've done 527,000 shares in the first 15 minutes. That's after doing 2.3 million yesterday. So it's coming up against the swing point high. So it's coming up there with good juice. So the swing point high, let's see, on the 23rd, you got up to 61.61. 61.62, that's the number we'll take a look at. 61.62 on January 20th, 3.9 million shares. As I said, so far you've done 539,000 shares. Should have the juice. Let's go ahead and pull Travelers back then. See what Travelers is doing. Let's look at the weekly chart on Travelers. Travelers representing about 3.5% of the Dow from a weighting standpoint. And so what Travelers here is doing is going to go ahead and take on the swing point high from May 2011. 14 million shares up there on the weekly basis. And if it can catapult over that, let's take a look at, there's a couple ABCD patterns that are out here inside Travelers. The first one starting down here at the low on the week of October 7th. We know it was really the October 4th low. We're going to go ahead and pull back as it did into the December 2nd week when it made a low of 53.80. That's 1A to B equals CD out there. Let's look at the smaller one that we have. That smaller one coming into the December 2nd low where we'll start out at 53.80. The high put in here that it's taking on right now this morning, that was put in on January 20th. That one was the high of 61.62. You're up at 61.77 right now. So let's go take a look and see where those two A to B equals CD patterns meet. And or if they do meet, looks like 65.11, 66.05 would be the area that Travelers is going to head to. That's assuming that it can get up in over the May 6, 2011 price point of 64.17. That's on Travelers. Let's go see what else. Caterpillar. Caterpillar is up next. They represent 6% of the Dow. They're trading up about 80 cents right now. Let's see here, CAT. Ticker symbol trading out at 109. So they made an AB equals CD down. They are, let's see here. Let me try to just blow this up on the screen, make it a little bit easier for you guys to see. So let's go ahead and get rid of that ABCD down pattern here. See what we've got going on. So right now, just take a look at the retracement that it's doing. Let me just put this up here. Let me see if anything pops up when I do this. So it's made a 70% retracement right now, taking on its swing point from March 27th. 4.2 million shares out there. Yesterday you came into it 4.8. So far you've done 559,000 shares. We'll be right back, folks. Dow is up 26 points right now. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best-kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. 877-927-6648. Dow up about 18 points right now, 16 points. S&P's up 2, Composite up 13, small caps up 4. You got the New York Stock Exchange up 16, the NDX 100 up 8 points right now. And let's see, what I've got up on my screen here is the Great British Pound. The pound was really moving really moving strong yesterday as it was attacking the swing point high out there from April the 2nd. The high on the pound was 1.6062. You're trading out right now at 1.6059. It is attacking that area again today. You get up a close above 1.6062, and what it wants to do is at least take on the highs going back to October 31st up there at 1.6165 with the pound moving up the way that it is. And you can see that this is the daily chart we're looking at. You are seeing this continue to make here now higher lows and higher highs after it came off of the low going back to January of 2012. And today it put in just a slightly higher high. And when you do that, folks, it says that price wants to move in the upward direction. That is what is helping to put in a little bit of weakness in King Dollar. You got to take a look at the basket of currencies. It's not all about the Queen. Sometimes it's about all of those knights that are out there, with the pound being one of them, the Japanese yen being the other. Let's put the Japanese yen up here on the screen. The Japanese yen looks like it may be putting in the next leg of its C to D leg after making a retracement. That retracement on the way down here, coming off of the huge move from early in February 2012, all the way up to the high that was put in on March 15th, almost went nonstop, weakening against the U.S. dollar. Did just a little bit over a 0.382 retracement here, and if this is the next leg up, that will also put. Now this is here. You've got the yen So here's the yin and the yang. You got the yen. This chart here showing the yen getting weaker. That means the dollar getting stronger. But if this is the next move up inside the yen, that is going to take the yen up into the 88, more likely the 90 area. That is the yen, U.S. dollar, yen currency pair combination. Again, real quickly, go back and take a look at the queen, see what the queen is doing. And the queen right now is rejecting that swing point from March the 15th. That is, putting a little bit of pressure on King Dollar. If we go take a look at the crude marketplace, let's go take a look at light sweet crude. Yesterday, putting in a bearish engulfing candle right here. And you know what that says is that says that we're going to at least see crude because it looks like you're getting the confirmation today. Right now you're trading below yesterday's close. Yesterday closed out at 102.77. You're trading out at 102.60. Get it closed below 102.77. You've got a confirmation to at least go down and test the 100.68 area. But looks to me like we could be setting up a new A to B equals CD down in light sweet crude. That would be a beautiful thing. Of course, if we do that, I would expect we'll see King Dollar on the move to the upside. That A to B equals CD down would take light sweet crude into the 97 buck range, maybe even get down to 95 and test out the lows going back to February 12th. Quick back, just for the last few seconds here, as we go back around the world here, let's go see what is going on with the DAX, and the DAX here rejecting that channel line right here as you see it. So you want to pay attention at 11:30. Take a look at where the DAX is, see if it has rejected that area. Why? Because we have the same thing going on in our markets. If you take a look at this as being a one world market, and if you take a look at the S&P 500, you can see the S&P is really showing you a heck of a lot stronger price than the DAX. Folks, thanks for being here. Stay tuned. Tom and I will be up next. If not, have a terrific Thursday, and I'll see you bright and early tomorrow morning. Take care, folks.